Hello everyone, today in this video we are going to show you the RSI indicators and easy trading strategy for beginners, and it's how to use RSI to find overbought and oversold zones, spot reversals and understand momentum. So in this video you will learn how to use the RSI indicators, one of the most popular tools to find when the market is overbought or oversold. So if you can see this screen, we are choosing any coin that will be used for to showing you that the understanding of this indicator, how it works. So in this RSI means if we can declare that RSI stands for relative strength index. It measures how strong or weak the market is based on the recent price movement. It helps trades spot possible reversals. So you can see we are on the trading view. So first of all, I am showing you that the indicators, how you can add on that. So just click on that indicators and search for the RSI indicators, and you will search that relative strength index. You can make it favorite or just add on that. I already have added many indicators. That's the reason the new indicator is not adding, so I am deleting the previous all and just search on again relative strength index. So click on that. It will automatically add to your screen on your screen, and you can take just one on that and just show steps in trading view. That will be easy for you. If we go for the setting, you can see the RSI is 14 and 15. So if we can just add on that RSI setting, just make the RSI length is 70 or the smooth length is 30, then just click OK, and that will show that the value of that indicators on pixel. Just on see that you can also look for divergence when RSI when the RSI above 70, when the RSI above 70, the market is overbought. That means you can see the market from here. This is 70. That means this market is overbought. Okay. That when the RSI below 30, that means it's oversold. Price could rise. So it doesn't mean you buy or sell instantly, but it's a strong signal to us. So the market, if from here the market is oversold, that means going up. So market always try to be a medium range, that the average point, you can say that when the market is market trend line or the down line and already existing, that's the position you have to calculate the average point. So this indicator is RSI indicators make that the system, the 17 and 30, if we setting that the overbought and over selling the position, you can understand. So that's the way you can take the profit on that. If we practically see that rhythm, you can see this is the point when there is the upper 30. So if we see here, this is called this overbought. The indicator showing the overbought, because this is the middle area. Okay, this is the middle area. When it's uptrend and it's going this here, this is means this is the yellow marker. But when this market is going up to the yellow, that means this is overbuy, and that's the reason when the market does that the yellow line, then you have to enter this market to as a seller. So the market is going down because I already said that the market is overbought. So you just entry from here and the market will going down to here to here. So in this position, if we analyze this position, so if we can see here what is happening, the market is here is going to downtrend, and this is going here for the average position. So this is the average position. The market is sideways now, so here is not the perfect entry. So what you have to do when the market is going here or here, so that's mean this is the overbought and there is the overselling. So this is the selling and this is the overbought. So you have to just on that one position to entry. If the market is here, then you have to entry from this position. You have to enter this position for a seller position, and if you're going to here to entry for the buy position, market here to be up and to be down. So in this situation, RSI indicates this average position to when the market is going up or down. And you can also look for divergence. If the market price a higher high but RSI makes a lower high, that's a sign that trends may reverse. The same works in reverse for bullish divergence. RSI works best when combined with trend line or moving average. So for example, trades only when RSI and price both agree with the trend, and that's how you will use the RSI indicators to find high probability trade entries. In the next video, we will explore another momentum tool, the MACD indicators. Don't forget to like, subscribe, and comment if you use RSI in the trading. Thank you.